welcome to Stocks Down Under. Today we're joined by Rebecca Shooter-Dodd, the CEO of Revasum. Welcome, Rebecca. How are you?
I'm good. How are you doing?
Really good, thank you. Let's jump straight in. Earlier this week, Revasum released a presentation that you're giving to the CEO Summit this week. But the interesting bit of that presentation was actually hidden away on slide 22, I think, about the guidance for this year, but more importantly for next year. 25 to 35 million US dollars. So that's a big number. What gives you or the company the confidence and the belief to get to that number? Because there must obviously something underlying that expectation.
Yeah, so it's a few things actually. So we're seeing a shift in our revenue from silicon equipment to silicon carbide equipment. The 60Z has a far higher ASP than our other tools. So the more of those we sell, your revenue jumps up pretty quickly. And we did just get process acceptance on the first 60Z at our customer on Monday of this week, just before I released the announcement. And for people who don't know, that's a very big deal. CMP is a very challenging process step. So we think that will be really pivotal to increasing the sales of the 60Z. So some of it's that. There's also an uplift in the recurring revenues. I spoke previously about us really focusing on those recurring revenue streams and expanding that. So that's a chunk of it too. And we have strong customer forecasts. We're booking into Q3 now for equipment. It's looking really good, and I feel confident about the forecast.
Right. And just to clarify, Q3, when you say Q3, that's Q3 of next calendar year, right?
Yeah, absolutely. So our slots that we have in the plan are largely booked for Q1 and Q2. We have a couple of bits available depending on the piece of equipment, but we're really looking at Q3 now. So we're pretty comfortable with that guidance number.
All right. And when you talk about recurring revenues for our viewers, can you explain quickly what you mean by recurring revenue, what it means for Revasum, recurring revenues?
Yeah, absolutely. So it's a number of things. It can be spare parts, consumables. So the grinder has grind wheels, the polisher has polish pads. So the spares, consumables, service revenue. As we get more of these pieces of equipment into the field, people are looking for assistance above and beyond your normal warranty assistance on these tools. So we can charge for that and process development work. So the company really has a big focus on those recurring revenues right now and expanding that for the company. So it's exciting.
And when you look at the breakdown of the forecast for next year, about 2/3 roughly, depending on if you look at the low end or the top end of the range, about 2/3 is for new tools. So can you talk a little bit about the feedback you're getting from prospects and from customers about those tools? And you just mentioned that the acceptance came through for, I think it's the first customer for
the first 60Z, absolutely.
Yeah.
So the one we installed in Europe, the 60Z, it's installed and it's gone through process acceptance, which is the key, really. You can install a tool. If it's not accepted, it doesn't matter. So that tool is ready for that kind of production environment. So that's a really critical thing in this industry to achieve that sign off. Other people will see that, I think. It's a good tool. So I feel confident in where we're going with the 60Z. And the grinder has been around for much longer. And we're still seeing orders come through for that tool as well. So very excited. The industry for silicon carbide is really heating up, and it's kind of just up and to the right for the foreseeable future. People often ask me, is it going to be cyclical like silicon? We don't know yet. For the foreseeable future, it's up and to the right. So it's exciting for us.
Right. And I think that customer you mentioned that just accepted the first one, I think they also ordered the second one, right, for delivery in 2022.
Yes. So that will be delivered in Q1 of 2022.
Right. Looking at sort of the trials, if you can say it like that, how many evaluations are underway for your silicon carbide tools right now?
So we have the evaluation tool still out at our customer in the US. We have ongoing process development going on with them. And then I would say we're working to kind of 5 to 10 new customers, qualifying their process in our lab. Similar to how we did with the customer in Europe that's taken the first couple of tools. we're qualifying the process in our lab, and we're hoping to see purchase orders come out of that in kind of Q1 and Q2 of next year.
Right. And when you look at the market for silicon carbide grinders, polishers, you must have done the research in terms of market size and unit sales. How big is that market, and how quickly could you ramp up with your outsourcing manufacturing partner?
So it's still challenging to put a number on that market, and there isn't much research out there or much data. The wafer volumes that are being quoted publicly, I don't believe. I think our customers are running far more wafers than that. Can I put a market size on it right now? No. What I think we're going to see over the next 12 to 24 months is people taking their first 6EZ, their second 6EZ, and taking the time to qualify the process. Once they've taken the first one or two, the kind of companies we're working with will look to order 10 6EZs or 15 6EZs. That's the kind of volumes we will be looking at. And for those customers that take our grinder as well, just the context for people, the throughput of the tools, you have to have 2 grinders to every polisher. So for our customers that take both, we're really excited about the polisher sales. That's obviously our flagship product. But also excited about, okay, they'll need, for every 6EZ they order, they'll need 2 grinders.
And can you just remind us of the list price for both tools?
Yeah, so the grinder is $800K plus, depending on your configuration, and the 6EZ is $2 million plus, depending on configuration.
Right. Okay. So that sort of describes what the revenue potential could be for just one set of tools.
Yeah, absolutely.
Looking at the cash position, also in your presentation, you mentioned that you expect to be free cash flow positive next year. Looking at the cash position, I think per the end of September, it was something like 4.8 mil, and then you had a cash burn of roughly 1 million. I saw it at least in that quarter. Looking at those numbers, what can you tell investors about the potential or the lack thereof for a cap raise? Do you think you can get to cash break even without further capital needed?
Yeah, so we have no plans to do a capital raise at this point. The cash outflows this year are truly for inventory building and cash in advance on deposits for large inventory purchases. That will ease up next year as the orders come through, and we have no immediate plans to do a capital raise. We don't see a need right now.
Well, I guess investors are glad to hear that. Last question.
As always.
On the gross margins, usually with new tools, there's a learning curve for the company as well as they sell tools into the market. So your margins are typically a bit lower, but as you ramp up and when you get to some sort of critical mass, these margins have the potential to go pretty high, actually. Looking at your gross margins, I think it was around 35% in the last quarter. Where do you see those going once you get some sort of traction and track record in installing these tools with customers?
Yeah, absolutely. So I think the 35% is an incredible margin for the capital equipment industry, in the semiconductor industry. I would love to push that a little higher. I'm confident we can get it to that 40% mark next year. But that's a very healthy margin for capital equipment. So I'm happy with that.
Excellent. Well, Becca, thank you very much for your time. It's very exciting times for Revasum. We put stock on our topics list again. We had a very nice run earlier. It went a bit hard for us back then. This is 2 months ago, so we took it off. But the recent announcement, we put it back on. I think looking at the guidance for the next year at least, and from my point of view, it's a secular development for silicon carbide right now. Away from the typical silicon cycle. So I think there's probably more good years to come. We put it back on the list. We're pretty bullish on it, and we'll keep a close eye on what's happening, and especially purchase orders coming through.
Awesome. We're excited too. So glad you are as well.
Excellent. Thanks, Becca.